Hello and welcome to a Monster Money Trading educational webinar. As you've seen in the past week, volatility has really picked up. There's a lot going on. So perfect time to talk about trading in volatile markets. Today we'll be discussing how to adapt to volatile markets. Volatility in forex trading refers to sudden changes in prices that can be very difficult to predict. However, if we follow some guidelines, we can still make money even in such unpredictable conditions, and a lot of it. As traders, we make money off movement. I always say this to the guys in the chat trying to take trades in a range. You're shooting yourself in the foot. As traders, we make money off movement, whether it's up or down, but never sideways. Firstly, it's important to remember that traders make money off movement. Increased volatility is where we feast. When markets are volatile, there are more trading opportunities and potentially larger profits to be made. However, expectations. We need to be prepared for whipsaws, as we've seen in the past week. We have these wild 100-pip pullbacks out of nowhere. This means that we need to be securing profit and not getting too greedy. Always keep in mind the possibility of sudden price movements to be prepared to take action to protect your profits. Capital preservation. Extremely important. This goes back to trying to trade in a range. You're shooting yourself in the foot. Another key factor in adapting to volatile markets is capital preservation. It's important to understand the risks involved and remember that it's easier to lose money with such volatile conditions. If there is uncertainty, it's better to stay out. Even if you use this time to learn and take notes, you'll be better prepared for the next event. This is something that I can see now for myself after 4 years of trading, that I can see the experience coming in because I've preserved capital through the end of Feb when things were slow, beginning of March things were slow. Volatility is picking up now and I'm ready to feast. I'm ready to execute because I know what I'm looking for. I'm prepared. I understand how these markets are moving. I've gained that experience and I'm here to take advantage of not every move, but I'm here to take advantage of this volatility coming in. So even if you are newer, seeing the markets move in such a way, seeing the markets move 200 pips in a session, you don't need to catch that move. Understand that you can take this time to take notes, to study, and the next time something like this happens, you'll be ready to execute. Just whatever you do, don't go and blow your account in these conditions. We don't need to take trades every day. We need to focus on quality over quantity. Play the long game, build the skill, sharpen your tools. Emotions and psychology. In volatile markets, emotions and psychology play a big role in our trading success. We need to keep in tune with our emotions and what they're telling us and understanding when to walk away. Limit the number of trades taken, be selective with your trades, and keep yourself mentally fresh as there's new opportunities each and every day. I always say the market is going to be moving tomorrow. Maybe not tomorrow is Sunday, but Monday to Friday we know the markets are moving. There's always going to be another opportunity. Discipline. Just because there are more opportunities does not mean that you can go off your trading plan. Stick to your plan. Stick to your rules. They're there for a reason. Even if price hits your targets and runs another 100 pips, learn to accept that. Walk away. Be grateful for your profits. Be proud of yourself for sticking to your plan. Because at the end of the day, that's what matters. In the long run, that's what matters. building those good habits. New fundamentals coming into play. Of course, with this whole bank fiasco, there's headlines popping up out of everywhere. So we need to be on high alert for these possible new fundamentals coming into play. Be on the lookout for new fundamentals. As we've seen in the past market, new headlines popping up every other day. Stay adaptive and on high alert through these high volatility periods. Understand how to play new fundamentals to your advantage as they bring volume. And if you don't, like I say, stay out and study what is going on. Sentiment. Finally, make sure to note the sentiment of the market. This past week, the sentiment was driven by fear and bank bailouts as we saw liquidity pour into safe haven assets. Adapting to a bullish bias on gold played off well for us members on Friday. Very nice buys on gold and nice buys throughout the week on gold, as well as sells on GJ with the yen acting as a safe haven as well. But we need to stay adaptive to see what the central banks will do to calm the situation and be aware of possible shifts in sentiment. So obviously this is just, if you're watching this in the future, this may not apply, but just, of course, the same idea applies. Be aware of what sentiment is holding the most weight in that period of time. Stay on top of this. If we stay on top of this, understanding the sentiment, see what's holding the most weight, it helps us to identify higher probability trades and execute with confidence. Wanted to keep this one short and sweet, guys. Like I say, probably going to be a pretty hectic week next week with FOMC, gold pushing at this rate possibly to new highs next week. So we'll take it as it comes. But like I say, guys, safe trading in these market conditions. I hope that you've taken away something from this. There is plenty to take away from it. So take some notes, do what you need to do, and keep pushing forward. Thank you for joining us today. This is Connor, your host from Monster Money Trading. I'll see you next week, Monday, for the London session live stream. Cheers.